Okay, I hope now maybe you can hear me now. Can you hear me now? Okay, it's a bank. Okay, is it better now? Can you hear now? Yeah, can you hear me now? I think we should be good. We should be good now. We should be good. Yes, thank you so much. Thank you so much. It's just fat fingers. Fat fingers. I pressed the wrong button. Good stuff. Thank you so much. Phillips, you're here. Good to see you. Philip is here. Augustine is here. Tabang is here. Good to see you all. Excellent. So, how's your day been? Your day's been good, right? So, you've been trading well. It's been fantastic. You've been making money. So, we want to make money together tonight. We want to make money together. So, could you just let me know if you are here? Just say hi so I know that you are here. I know Philip is here. Augustine is here. Tabang is here. So, if you are here, just type your name or just say hello so I can know, I can recognize you and shout your name out. Okay, smashing. So we are here tonight to look at this beautiful strategy. A beautiful strategy that we have been using for a long time now, and a lot of people have been saying that it's very, very good. So let's hope that it will prove to be excellent again. If there's opportunity for us, we're going to do some trading on the MT4 platform. If there is opportunity, otherwise I will explain the whole thing for you, and you can go and practice it on your own as well. So thank you so much for joining again. So we are going to make a start at it. Okay. First of all, if this is your first time of joining us, could you just type I am new? Just say new so that I know how to slow down or to be fast. So if you are new, type new so that I can slow down and explain much detail for you. But if you are all here before, you know about this strategy, there's no need to slow down at all. We should make it fast. All right, so okay, so Philip is new. Okay, good. All right, Philip is new. So I will take it easy and explain the strategy in the first 5 minutes. Okay, Augustine is also new, first timer. Okay, brilliant. All right. You can see not many people are here yet because this strategy is so simple. Once you learn it and you do maybe 2 or 3 times, you feel you don't need any more training. That's why we get more new people than the old people sometimes. Yeah, it's a good thing because when the strategy is so simple, it doesn't take you time to learn it. But when it's complicated, you keep coming back and getting explanation of the same strategy all the time. So, because people that are here today, they are practically new, so let me go ahead and explain the strategy. All right. So, the strategy, we call it what? Inside bar. Okay. So, first of all, let me define an inside bar. Okay. Inside bar is a candle like this one you are looking at here. A candle that is formed completely inside the previous candle. You can see this previous candle is what we call the mother bar. The mother candle is bigger than this small candle. Not only that is bigger, the highest and the lowest point of this inside bar candle is completely formed inside this mother bar. You can see the wicks, the top and the bottom wicks of this inside candle is completely engulfed within this bigger bar. That is what we call inside candle. So if you find any current candle that is completely inside the previous one, that is your inside bar. Take for example this one as well. This black candle here. You can see the high is inside the previous one. The low is also inside the previous candle. Okay, so that is the definition of inside bar. As you can see, this color here, this blue color here, what it's trying to help us to do is to identify the inside bar for us automatically. This one also is an inside bar. It's identified automatically for us. This is also an inside bar. It was identified for us. This is also an inside bar. It was identified for us. So instead of you finding it, so we have one indicator that do all the findings for us. Look at that. That's also an inside bar. Okay. So that is why we have this indicator. It's called the inside bar indicator. But if you don't use the indicator, you can look for it yourself. You can find the inside bar on your chart. I hope that is clear. That question is clear, right? Okay, so no trouble with that question. Yeah, you know what is inside bar now. Cool. So you know what is inside bar, but you can see two other things on this chart. This is a moving average. Moving average, simple moving average, 10. Simple moving average, period, 10. And the second indicator we can see below here is called bandwidth indicator. Actually is Bollinger bandwidth indicator. Okay, so let me show you all the indicators all together first. Then we will discuss. I hope you can see. Then we will discuss. We will then discuss how to apply those indicators. Okay. All right. So let me know if you can see the properties. Can you see the properties? Can you see the indicator properties? Yeah. Okay, if you can't see it, then I will find another means of explaining it to you. So I just want to be sure that you can see the properties first. Then we move ahead. We move ahead. Okay. All right. Doesn't look like you can see the properties. I don't think so. All right. So what I'm going to say is that we have three indicators. The first one is the inside bar, which just put these colors for us. The second one is the moving average. Okay, I told you is a moving average 10. Okay, simple moving average. And the third one is the Bollinger bandwidth. Okay, let me explain how we use these three things together. First of all is to identify the inside bar. Once you locate an inside bar, that is number one is done. Your task two is to look at where the inside candle, that inside candle, is it above moving average or below moving average? Okay, if it's above moving average, like here, you are going to be looking to buy. If it's below moving average, like here, clearly below moving average, like here, you'll be looking to sell. Okay, or here below moving average, like here, you'll be looking to sell. So this is our current time. We are now in current time here. So this particular one is formed above moving average, so we are looking to buy. But before you press the buy button, you just need to check that the bandwidth color is red. Okay, the bandwidth color is red. The reason for the red color is momentum. When the bandwidth is red, there is a huge momentum. There is a trend in the market. That is why it went red. If it's in a range band market, the Bollinger bandwidth will be yellow or any other color. Okay, so the bandwidth will be yellow or green, whatever, but only when it is red you can take a trade. So for this particular inside bar signal, you can see that we are above moving average, so we are looking to buy. So you are going to draw your line here. Okay, let me quickly adjust that. So you are going to buy your line here. So you're going to put a line here showing that you're going to put your line there showing that you want to go long, right? Showing that you want to go long. Let's make it some kind of a red color or something. Oh no, that one. Okay, so no, that one. Okay, so what we are trying to do here is you're going to right, rectangle. We don't want it red, man. We want it back to blue. Okay. All right. So you see here, that is the we draw a line above the mother bar, and when the price breaks above the mother bar, and you can already see that the bandwidth is red, that is a buy signal for you. Okay, that is your buy signal. Okay, so that is your buy signal when it goes red. Okay, when it goes red, that is your buy. When it breaks it, that is your buy signal. Okay, so let's make this also thicker. All right, so here we have a breakout here, so you go long on the breakout of this inside or of the mother bar, you go long. And where do you put your stop loss? You put your stop loss below the inside bar candle. That is your stop loss. This is your buy signal, and this is your stop loss. Okay, so how do you put your take profit? Take profit target is TP1. The first take profit target, initial take profit target, is the size of this stop loss. Okay, so you measure the size of the stop loss. For example, between here and here, it is about 20 pips. Then your take profit 1 will be 20 pips, somewhere around here, 20 pips. Then your take profit 2 will be 40 pips, somewhere around there, 40 pips. As you can see, even your take profit 3 could be 60 pips. TP1, TP2, TP3. So on this occasion, you might be able to get your TP1, TP2, and TP3. Or maybe you only got TP1 and TP2, that's fine. Even some occasion, you only got your TP1. But usually, if the signal is good, you will get your TP1 at least. But be prepared. Be prepared to get more than TP1. So it means that you may have to split your trade into 3 or into 4 and set different take profit target for each of those splits. Okay, so I took time to explain it, but I think I would even do more explanation as we take more example. So if you haven't understand it yet, don't worry. We are going to go through more examples, and we are going to do it over and over and over again until you understand. Okay, brilliant. All right, any questions so far? Okay, so don't worry, if you have any questions, just put it there and I will answer them as when I come back to read the comments. But can you please give us a like? If you enjoy this this lesson, give us a like button and make sure you subscribe to the channel so that when we do the next video, you will get notification. So please give us a like button. All right, thank you so much. All right, so that is example number 1. That's a buy example. So let's look for a sell example. Let's look for a sell example. Okay, let's take this sell example. This is a sell example, right? Okay, so we're going to follow the same thing. You see the inside bar here, and it is formed below. It's formed below the mother bar. Okay, sorry, it's formed below the moving average. But at the time the line is crossed, so let's say we draw a line here that we are looking for the breakout of that. We are looking for the breakout of this line. Yeah. At the time when this line is broken, all right, so we are looking for the breakout of that line. When this line is broken, let's see what the color is. The color is not red, therefore it is not a trade. Okay, it's not a trade because the color is not red. So let's look for a good one. Okay, all here, no trade here because the Bollinger Band color is not red. Okay, all right, this is a good one. Okay, this is a good example. Okay, so you can see here Bollinger Band color is red, and we have an inside bar candle here. So let's draw our line. So we draw a line here that if this line is broken down here and we are below moving average and we have a red BB width, okay, Bollinger Band width, what are we going to do? We are going to sell. Okay, so when we sell here, where is going to be our stop loss? Just above the inside bar candle. Okay, that will be the stop loss. So we're going to put, let's just put a text box here. So this one is sell. Okay, so we have a sell here. Let's make it black so we can see it. Okay, so we have our sell here. We sell here. Okay, and here let's make sure we put this one, which is a stop loss. So this is stop loss over there. That is stop loss. So what is our take profit? As we said earlier, take profit is the size of this stop loss. So let's measure. Size of this stop loss is what? Is 28 pips. So our TP1 will be 28 pips. So let's say we're just going to approximate. Let's say that is TP1. We are going to put TP2 somewhere there. We are going to do TP3. TP3. You can see that even my TPs are bigger than what it should be. TP4. You can see you can even reach up to TP6 on this one. Not all of them will work like that. Yeah. Not all of them will work like that, but sometimes you can get a runaway trade. So when you have a runaway trade like this, just sit and milk it. Enjoy the ride where it lasts. So what you need to do is you place your sell here. You can see your stop loss has not been touched at all. So when you hit your TP1, let's say you have 1, 2, 3, 4, 5, 6 trades. Let's say you have 6 trades or even 5 trades. Because you can put all the trades at the same time. Let's say you have 0.01 lots, but 6 places, 6 times. So the first one, you set your TP to 28 pips. The second one, you set it to times 2, 56 pip. The next one, you set it to times 3. The next one times 4. The next one times 5. So as soon as you reach your first TP, okay, as soon as you reach your first TP, what you do, that one is gone, right? So this first one will be gone. So you have to move your stop loss to break even, to protect. So you move your stop loss to break even to protect the rest of your trade. So you move all the other trades to break even. So your stop loss was here before. You then move your stop loss to break even, okay? You move your stop loss to break even. Now, when you hit TP2, you move your stop loss to TP1. When you hit TP3, you move your remaining trade to TP2. When you get to TP4, you move your remaining trade to TP3. When you get to TP5, you move your remaining trade to TP4, and so on and so forth. You'll be locking into your profit. That is what is called trailing stop. But you are not trailing it by every pip or every 2 or 5 pips. You are trailing it by the size of the stop loss. So it's so easy for you to do. So you trail it until you are taking out, as you can see. And the last trade, right? The last trade will be taken out from here. So once you hit TP4 here or TP5 and you move your stop loss here, any other trade that is left will actually be closed at this junction here. All right, it will be closed at this junction here. Look at how much you have gained from the point of selling. Let's try to find it. From the point of selling, you got up to 207 pips, and your risk was only 28 pips. So that's huge. And your last trade, you ended it at what? At 158 pips. So brilliant. So this is a sell example, and we show earlier the buy example. So this strategy is very, very simple. All right, let's see what questions you got. Is it work only for currency or any other markets like commodity? Yes, it works for any other market. It works for any other market. Any market that you can put moving average on, and you can put bandwidth on. I mean, for example, let's say this market here. Let me view market watch. Okay, so I'm going to view market watch. So let's go, instead of currency, let's go to let's go to metals. For example, let's go to gold. SAUUSD. Okay, that is gold. Okay, so for gold, let's see what it does. Okay, so for gold, for example, you see it's yellow here. So for all this period, there's no trade. So don't attempt to trade when it's not giving you any signal. Okay, so let's see whether we can get a proper signal. Okay, all right, so this looked to me like a signal, right? Let me make it bigger. So this is a signal to me. This is also a signal. This is also a signal. This is also a signal. Oh, no, because this one here, you can see it's under yellow. This one here is under red, which is a good signal sell. This one also is under red. It's a signal to sell. This one is under, it's above the moving average, yes, and it's red. It's a good signal to buy. So let's analyze the 3 or 4 of these. Okay, no, this one will not qualify because it's a yellow. It's not red, so it will not qualify as a trade. But these 3, 1, 2, 3 will qualify. So in this case, because it's from below moving average, you are looking to sell. So you draw your line just below the mother bar here, and your stop loss is very simple. It's very small. Because of this strategy, it keeps your stop loss minimal. So that is your stop loss. Then you can see the magnitude of your, so your stop loss here is what? Is, okay, for this is gold. So let's just say it's 11.5. Okay, 11.5, and your target potential profit here is 74.8. So that's about 7 times. So 1 to 7. Not necessarily you are going to get all this, but that is just the potential. All right, let's analyze the second trade. Second trade is here. When this is broken, your stop loss is going to be right. Okay, so your stop loss is going to be the highest. Let's use the highest of the breakouts. So in this case, you can see that you didn't get much profit. In fact, you see that you have another inside bar while your trade is still ongoing. Okay, so in that case, you don't even want to wait until you hit your stop loss. You can quickly close it at a small loss, because you can see here you have another inside bar which is opposite to your previous trade. So you have a sell trade, and now you generate a buy trade. So at that point, you say, oh, okay, that sell trade is not going anywhere. You kill it with a small loss, and then you move to the next one, which is this one here. On this occasion, this is going to be a buy. So this is going to be a buy trade, right? So this is going to be a buy trade. So when the price breaks this mother bar going up, that is a buy, and your stop loss is going to be just below this inside bar here. You can put your stop loss below inside bar there, and then let's find out how much is the stop loss in pips. That's about 10. And what is our potential? Huge. Even if you stop here, that's 24.3. That's 1 to 2 ratio. If you move up, that's about 1 to 4, and so on and so forth. So you can see how it works. You can do exactly, but here there's no trade here. Okay, can somebody tell me why there's no trade? So I'm going to put a text box there. Say here, let's say, is there a trade here? And tell me why there's no trade there. Okay, if you think there's a trade, say yes. If you think there's no trade, says no, and tell me why. Okay, on this inside bar here, is there a trade? Okay, is there any trade on that inside bar? On this inside bar here, is there a trade there? Okay, tell me your answer, please. Is there a trade there? Okay, so what you are asking for time frame, right? Okay, so currently I'm using 4-hour time frame, but 4-hour is just the default that I use. But you can go as low as 5 minutes if you like, and you can go as high as 1 month if you like, because it will give you signal whatever time frame you use. Good signal, accurate signals. If you are a short-time trader, you might be looking at 5-15 minutes or even 30 minutes. Medium-term trader, 1 hour, 4 hours. And long-term, you'll be looking at daily, weekly, or monthly. So having said that, probably let's switch to a lower time frame. Let's switch to 15 minutes on this chart, and let's see how it behaves. Okay, let me go to the light current one here. So this is current signal. Okay, this is the signal before this last one. Let's look at this signal first. You can see we have red, right? We have red bandwidth. Okay, so when we have red bandwidth, we know there's a potential of trade. So we draw our line there. If that line is broken, we're going to buy. Okay, as you can see, the line is broken, so we are buying. So we are buying at this line here. Our stop loss is going to be just below the inside bar. That's our stop loss. Okay, let's find out what is the stop loss size. Stop loss size in this occasion is 30 pips. So our take profit target TP1 will be around about 30 pips. TP2 will be about 60 pips. Maybe if you are lucky, let's say 30 pips, 90 pips. Let me find out what they are from here to here. Yeah, that's 93. So, well, my drawing is accurate. Even though I didn't measure, but it seems to be accurate. Nearly 90. In fact, it's more than 90 pips. So on this particular trade, you are going to take your TP1, TP2, TP3, which is fantastic. Okay, that's a buy. Now let's look at this current one. Okay, this one is going to give you a sell trade because you know that we still have a red candle here. Okay, so let's move. So in this case, we are going to look for a sell. Okay, so when that line is broken right here, we are going for a sell. Okay, and once we sold, we are going to set our stop loss just above the inside bar candle. Okay, so that's our stop loss. That is the inside. Okay, that's the inside bar. The white one is the inside bar here. So we set our stop loss there. So that's our stop loss. So we're expecting this currently to still go down. So our TP1, let's find out what is this stop loss size is 27. This is 27 pips. So our stop loss, the first one will be 27 pips. Maybe sorry, take profit. I mean, not stop loss. Take profit is 27. The second take profit will be like 54, something like that, or maybe a little bit down. The third one will be times 3, whatever it is. So you can set your TP1, TP2, TP3 and just wait for what happened to the price. So this is gold. According to our strategy here, gold is going to drop a little bit before it rises again. We are not guaranteed that it's going to go to TP1, 2, and 3, but we are being confident that it might reach our TP1. And as I said, once you reach your TP1, what do? You move your stop loss to break even. Yeah, once you get to TP1, you move it to break even. When you get to TP2, you move it to TP1. When you get to TP3, you move it to TP2, just to protect your profit. So whatever that happens, whether it take you out or you are still in the trade, you know you are doing the right thing. Good. I hope it's becoming more clearer for the new people. So let me know if you have any further questions. I will answer them for you. Okay, so let's cite one more example. Okay, this time around, let's use indices. So we have done Forex, we've done metals. So let me look for one indices. All right. So let's use UK 100, for example. Let's see how it performed. Okay. All right. So here is today's chart. Okay, we can change time frame to, let's say, 1 hour if you like. We can change time frame to 1 hour. So on a 1 hour time frame, you can see there's no trade here because it is not red. The bandwidth is not red. So let's look for where we can find a red bandwidth. We can find red bandwidth here, but there's no inside bar. So let's see where we match. Okay, here we match red and inside bar with the red candle, but here there's no trade. You know why? The former question, anybody answer that? Oh yes, thank you very much, Raja. You got that. It's because it's a yellow band. Yes. That is it. Augustine, you're right, because it's yellow, and Raja, you're right, because it's yellow. Okay, does this ever behave like engulfing bar? Yes. And no, the mother bar behave like engulfing bar. The mother bar behave like the engulfing bar. The mother bar is the bigger one. The inside bar is the smaller one. Okay. So the same reason here, you can see the reason why this is not going to be a trade. Yeah, the reason why this is not going to be a trade is when we break the mother bar, we are still above moving average, and because of our condition says to sell, you must be below moving average. Although it looks like a very good trade that could give you quite a lot of risk reward ratio. Reward to risk ratio is very, very good. I mean, look at the risk. Look at the risk is only very tiny. This is the tiny risk, and look at the huge reward here. That's your risk. If you measure that risk, is only what, 8.8. Let's call it 9, and let's see what your potential reward is. 158. So that's about 1 to 20 ratio 1 to 20, or ratio 1 to 18. That's quite a lot. I mean, if you get this one once, you might just just take a break for the rest of the month. Take a break for the rest of the month. Okay, so that is UK 100. I'm using 1 hour chart. So if you want to go even higher to weekly, but not many people will be using weekly, but in case you want to try weekly, this is what it will look like. Look, all these ones, there's no trade here, and it's good because you can see it wouldn't give you good results because there's not much happening. It's not in a good trend. You know, we are having a bullish and bearish candle intersecting each other. A trend will continue to be bullish. Maybe it will have a little bit of correction, but continue to be bullish. But this one is full of correction and lack of momentum. Okay, so let's see whether we have a good trade anywhere on this weekly chart. Let's see. Yeah, we have some here. That's a good one. That's not a trade because it's under yellow. This one is a trade, but you didn't get too much profit in that. This is not a trade because it's under yellow. This is a trade, but you didn't get much from that. This is not a trade, it's under yellow. None of these are trades. Okay, this one is a trade. That is not a trade because it's above moving average and we cannot sell above moving average. This is not a trade because it's under yellow. This is not a trade because we're above moving average and the breakout is bearish breakout. So this is how you interpret it. So it can be used for any pair and it can be used on any time frame. Any more question? Let's see. Yes, where to get the band indicator? Okay, good question. All right, how to get the band indicator is that you are going to go to this current video that you are watching right now, this live video. In the description, in the video description, there is a link to download this. So you can go there after we finish. Actually, I don't know whether if you go there right now, you can find it. If you go to this particular video now and look at the description, there's a link there where you can actually download it. And also, what can also help you is that you can join my Telegram group. Telegram group is free. So when you join the Telegram group, you might come and ask questions about this strategy or any other strategy that we teach. Okay, so that is the link to Telegram group. So it's a way to sharpen your knowledge. So you come and join over 1,000 people, traders on that channel. It's free. You don't pay anything. Just join it and see what kind of trade people are doing. If you have questions, post it there. If you have any chart examples, also you are free to post it. We only say people should respect each other and no advertisement. That's all we say on that Telegram group, but it's a very useful tool for traders. All right. Okay, so let's see. Let's move from. Okay, let's go to cryptocurrencies. So we have looked at forex, we have looked at metals, we have looked at indices, and now lastly let's look at crypto. I'm going to pick maybe BTC, Bitcoin, maybe Bitcoin, the big one. Let's pick Bitcoin and see how it performs. Okay, so this is Bitcoin. Weekly, no, we don't want to do weekly. Let's do hourly, for example. Okay, so let's look at hourly. Here, this is not a trade because we haven't. Let me see. No, because we haven't broken the lower yet. Because if you break this lower here, that's when it becomes a trade. But let me give you a caveat. Okay, when you see a bar or a box inside bar that is massive, right? So, and it takes so many candles to either break below or above it, just avoid that that inside bar. You can see here 1 2 3 4 5 6 7 candles. They cannot break either the upper or lower band here. You can see the mother bar, they can't break the high of it, the low of it, they can't break it. So they are forming inside, completely continue to form inside it. So the maximum should be three bars. Like this one, this is just 2 bars and it's gone, it's broken. Look at this one, this is just 2 bar, it's broken, it's gone. But look at the next one here. Look at the next one here. 1 2 3 4 5 6, number 6 bar before it's broken. Avoid it. As you can see, it wasn't a good one anyway. This one is 1 2 3 4. Even 4 is getting too much. So I would recommend between 1 and 3 bars. Once 1 and 3 bars broken, that's it. That could be a good one. Like this is 1 2 3 bars. This in that smaller one is 1 2 3 bars. The bigger one is 1 2 3 4 bars. This one is longer. 1 2 3 4 5 6 7. In fact, it is even yellow anyway. All right. Okay. Look at this one. 1 2 3 4 5 6 7 8 9 10 11 12 13 bars before this is broken. Not good. And actually, you cannot even trade it because it is yellow anyway. It is not red. It is not red. Okay. So that is how you can use this strategy on any instrument, any time frame. We are looking at 1 hour. You can switch it to anything you like. Boom and boost, or what's that called? Boom and bust. I don't have that on the MT4 platform here. Let me check. Boom and crash. I don't have it here, but if I have it, I will have shown you example of it, but I don't have it here. So let me see if I can show you anything else. But I don't trade most of these exotic pairs. So I just trade, if you ask me which ones I trade the major and the minors, but I don't trade exotic. So like I wouldn't go for something like USD Singapore dollar, for example, no. Aussie Singapore dollar, no. Swiss francs Singapore, no. Euro Danish kroner, no. Euro Hong Kong dollar, no. Euro Norwegian kroner, no. Euro Polish zloty, no. Euro Swedish kroner. You got what I'm saying? So GDP, Danish kroner, no. All these ones I don't do them. US dollar, Chinese, no. So I only trade the major and the minors. Okay. And ideally I use 4 hours time frame, but I do come back to a lower time frame sometimes as well. Okay. So all the time frames are good. Excellent. So it's been fantastic. I think I've got all your questions answered. And I've shown you how to join the Telegram group if you want to join Telegram group and get your questions answered. So if there's no more questions, ladies and gentlemen, or if you want me to show you one more example, let's look at GBP USD, for example. GBP USD, type in the box if you want me to show you any other example. All right, yes. So it's available on MT5. That's boom and crash. Yeah, okay. Yes, I can have a look at that. Maybe next lesson I could play that. I could use MT5 for you next lesson and show it on boom and crash whether it works. Yeah, okay, good. So if you want me to show you any charts, any time frame, any pair, just type it here. We will do the example of that. We will check it out. And yes, so we might even take a trade just to show you how the trade works. Let's go to 5 minutes, for example. Let's go to 5 minutes and see whether there's anywhere we can get a trade. So for me, I will just go through the pairs like this. Pick the first one. You see, no trade here. Okay, because we are yellow. Because of the time of the day anyway, we are not going to be able to get any momentum in the market, because after US, after Europe have closed and US already, they've done most of their trading, so the market is nearly dying off till the Asia market is open later on. So that's why you can see 5 minutes is going to be, you're not going to see anything red because we are now in a range band market. Okay. USD JPY, you see, range band market. USD CAD, range band market. Euro GBP, probably range band market. Aussie US, range band market. So we are not likely to see anything to trade. Even let me move to 1 hour and see, because sometimes, like this is 1 hour, for example. Let's see if we have any inside bar. Okay, so we have some inside bar. Look at that. Look at that beautiful trade here on a 1 hour chart of Euro CHF. You can see that's a nice one here, nice one there. But currently there is no trade we can take on that. Let's see pound, Swiss francs. Okay, this is not red, so there's no trade there. Euro JPY, this is not red, no trade. CAD JPY, well, this is a good one, but actually it is not tradable because it's not red. At the time it crosses, you can see this is the candle at which it crosses, and the bandwidth is still not red yet, so that's not a trade. Let's say GBP, Japanese yen, say the same thing. When it crosses, it is still not red. Aussie New Zealand, no trade. Aussie CAD, there have been trades before now. It's only because we have now moved into kind of a range band market, then you won't see much activity. Okay, no trade, no trade. Okay, for this one, for example, assuming that we wanted to try this one, so you've got a signal now, right? This is a signal, but you don't know whether it's going to break upward or downward, break bullish break or bearish breakout. So all you got to do is you are going to draw your line. So this line is like your buy stop. Sorry, this is like your sell stop, and of course you will not do a buy stop here. Why? Because if it breaks here, it's likely going to be below the moving average. So in that case, you are not going to sell. You're not going to buy below moving average. So no point drawing this one for now. So you are only waiting for this this low line here to be broken. So if you see this bearish breakout here, then you go short. And when you go short there, then this will be your stop loss. Just there, that's your stop loss. Just around there. Small stop loss. You have seen that most of the time our stop loss are not huge. So this is 1 hour chart, and our stop loss here is only 9 pips. Then you set your TP1 to be 9 pips, something like that. TP2 will be double that, 18. Maybe TP3 will be 3 times that, and there you go. Okay, so this is where you enter the market. That's your sell, and that's your stop loss. TP1, 2, and 3. So that if you want to take this trade, assuming that you want to trade now, this is a potential trade. Okay, and what you can do actually is to set a sell stop. For example, you might say something like new order. Okay, so you say pending order, you say sell stop, and just put a price here. What's the price there? 11979. So 11979, 119.79. That is your sell stop place. Okay, so that is it. You have placed your sell stop. So if the price reaches this sell stop, it will take you in. You'll be triggered, and once you are triggered, you put your stop loss. In fact, even before you triggered, you can just put your stop loss right away. You can put your stop loss. We say your stop loss is going to be here, which is what? 11988. So your stop loss is 119.88. Modify stop loss can. So that is your sell. That's your stop loss. So let's say you only have one position here, and you want to make it you want to make the TP, you want to make it TP. Let's say you want to do a TP2. So you know the stop loss was how many pips? The stop loss was about 9 pips. So take profit will be 18 pips. So if you take out 18 from 79, let's just say you'll be leaving with 61. So 61. Okay, so no, we're looking for, we want to set the, not the stop loss, we want to set the take profit, you know. Take profit we want to set. So take profit 11961, 119.6161. Okay, modify. There you go. So that is your stop loss here, and your take profit is TP2. Okay, I was even putting it far away before, so your TP2 is it's not that far. Okay, your TP2 is here. Okay, probably your TP1 is somewhere in the middle here. Okay, so that's your TP2. If that is where you want to target, you might target TP1 as well. So if you target TP2 and you hit your break even, you might move your stop loss. If you hit TP1 here, you move your stop loss to break even. Okay, so you move your stop loss to break even once you hit your TP1, and when you hit your TP2, that you are gone. Your trade is over in profit. Excellent. I hope it is clear now. All right, thank you so much. Oh, your battery is out. Okay, Phillips, You're right. Okay. Thank you so much, everybody, tonight. It's been great. I think I enjoyed this lesson today, and I hope you do. All right. So I will be coming back again next week, and I hope you guys will be there. So thank you so much for watching. Talk to you again next week. So it's Dare